Okay, Stallion. I love this about the way that you think. Is when I ran this idea by you and I said, hey, let's talk about how would we prepare for a crash or a recession. What's the first thing that comes to your mind? And you said, man, how I would bounce back if I lost it all. And I would, do X, Y, and Z. And I thought, man, what a great way to start off this podcast is focusing on this trampolining back. Where'd that come from in your mind?
Well, I can't take credit. I don't have any really original thoughts. But our friend Sharon Srivatsa shared with us that he worked with his coach one time because he was just kind of having some anxiety about this idea of like, man, what would I do if I lost it all? And one of the first things that he said he did is he just came up with this trampoline plan. It's, if I lost everything, where would I start? What would be my plan to get back? And just have it written down somewhere to literally take the mental break of not having a plan. Just by installing that one little thing, he can now focus on the growth opportunities ahead of him. And maybe you're like him, maybe you're not. But I think as we're considering this idea of what are some ways that we can put like defense mechanisms in place around our investing and our businesses, I think it's a good practical thing to do. And you may already have that in mind, but I'll go ahead and share mine if it's okay, Russ.
Let's do it. I want to hear your trampoline plan, man.
All right. So I'm kind of working on the assumption that all of a sudden, like you have no money and you have no audience, you have no like really any way, shape, or form to monetize anything. Like maybe your reputation.
Is this like the undercover billionaire kind of scenario when Grant Cardone was dropped off in the middle of nowhere with $100 and a old pickup truck?
I mean, I haven't seen it, but heck, maybe it's something similar. I don't know.
Yeah. Right.
But the way my brain immediately goes to is I would want to get into some sort of the real estate game that didn't require me to have a lot of money and didn't require me to have like a vast network of people that I could work with just immediately, because maybe my reputation has even been, skewed in the process. I don't know. I'm just saying, like, maybe I can't get a bank loan in any way, shape, or form. And so my first thought goes to the sub two process. And you guys have heard us on the show talk to guys like Pace Morby, who has built this whole concept where you go to existing homeowners and you purchase their property from them based on taking over payments on their existing mortgage. So what does that do? That limits your required amount of down payment and out-of-pocket costs in many cases, especially if they're close to being upside down. And you now own a piece of property that you can control by either renting it, you can flip it, you have all these different potential options. But what I would do initially, just to be super practical, because I'm not an expert in that by any means, I would go and find some way to beg, borrow, and steal enough money to hire, like to go through the actual sub two course. And it's about, between $7,000 to $10,000, depending on which one you go with. And I would use that to invest in myself, to then have the knowledge to be able to go out and do this. And then I would do what I do best, right? I would network with local real estate agents. I would go in to get MLS activity. I would go and basically connect buyers and sellers initially, like with wholesale deals. And eventually I would get into building my own portfolio of these sub two deals that after I got back on my feet, so to speak.
What's the most important resource that you have? If you really thought about this deeply, I think you'd come to the same conclusion that Joey and I did. It's time. In our newest book, What's Without Wall Street, The 3 Steps to Financial Freedom Through Passive Income, we talk about how are we tracking that time? What is the thing that we can do to get more of that time back?
That's right. If you've ever been listening to our podcast and thought, man, it would be amazing if I could take all the things that you guys have learned over the last 10 years and just summarize them, put them in some way to easily digest them and take action, that's what this book is all about. You're not going to want to miss it. Go to wealthwithoutwallstreet.com/new book and get your copy today.
is it all right, Ern, if I challenge him a little bit on his plan?
Hey,
It does. It
get
doesn't
in
matter
line.
what you answer, Ernie. He's gonna do it
Get in line.
anyway.
Get it. I mean, so here's the question I have. I'm riding down the road and I hear you telling me, you know what this is the big area I would go for if I lost everything, right? Worst case scenario, if I lost everything, I'd do that. And in order to do it, I'm going to need to go take some sort of course to learn how. That's good. But like, if I knew that that was my bounce back plan and I really want to lower anxiety to the lowest level possible, well, why would I make having to learn it when I had no money a hurdle? Why would you not go learn it today so you even knew how to do it, even though that you're not going to do it and don't need to do it today? Tell me, just give me one good reason why, if you knew that that was the way you're going to do it, you wouldn't know how to do it today.
I think for me, it's about the time commitment. In order to really learn something like that, you need to be actively involved in the process. It's not like I can just go read it or study it in a course and not have any sort of interaction with buyers and sellers. Like, I would need to be allocating time aside to do that. And for me, that's not a priority today. It's not really something I have the bandwidth to take on, but I see it as that would be the ideal way for me to get back on my feet and to do something that I feel like I would be really good at.
So what you're saying is I just pointed out a hole that you need to find some time to go do that at some point.
Hey, we can agree to disagree, Russ. Like, I don't think it's important for me to learn it today, but you do, so it's okay.
Well, don't come to me and try to get your money whenever you do. I'm going to tell you, you should have learned it ahead of time. All right.
You're gonna be broke too if I'm out, so it's okay. Don't worry about it.
Man.
No worry, I'll be borrowing money from you for my plan that I've not learned how to do either. Ern, what about you?
If y'all lose it all, the only way Joey's going to do that if you guys don't remain partners. Just saying. And Joey, what I heard you say is I would start a sub-2 business. But what I really heard you say is that you were going to get active in real estate, doing wholesale, playing connector. That's what you're going to do to create immediate income.
Correct.
You're going to turn that immediate income into a long-term sub-2 business to create residual income. So
That's
just for the record, what's the thing that you would do? You'd go get really active in real estate transacting, and you would then turn that into a sub-2 business. Is that right?
Thank you for clarifying, Ernie. Yes. I mean, I might need you to sit between me and my wife sometimes just to make sure that I'm clear, Thank you.
I got my own household to to work on that front.
Or tell me about your trampoline plan.
Yeah, Joey laid out the ground rules, and I'll take them. You have no money. You're starting over from ground zero. And fortunately, the thing that I know is the formula. How do you go from zero to hero? You start by getting active. I would start an operating business where I control input and output. And then, like Joey mentioned in a roundabout way, turn the earnings of that, once I'm able to pay the bills, into a long-term passive income play. So scale the business, turn it passive, or use the earnings of that business to invest in other assets that are more passive in nature to build multiple income streams. So what I would do is sit down and evaluate at that time, what are the things that I know the most about? How can I help people? And how can I build a business around that? And that would look like a product and likely a service. So could I build a course, a training that would be worth purchasing? And could I sell then some sort of a service, consulting or coaching around that to help people? And then I would go and, like Joey said, try to borrow some money, but not for the training, but for the marketing, to get that to audiences. Where are the people who need that sort of a product or a service, and go market in those channels and get active to create immediate income to continue to be able to feed the family. And once that grows, build that business out if it's worth keeping, to scale it, to free up a little bit of my time to go pursue some of the passive activities that I know about that I may have lost or may have wanted to begin. Like Joey mentioned, Sub2, great option on the back end for me.
So, Joey, you're setting up an active real estate business, focused mostly on the creative finance side. Aaron, you're building some sort of online core service-based business. Oh, good ideas. And I've said this over and over again, but like to me, this is the trampoline plan, and I do get some of this training a couple times a year, so I feel like I'm taking my my prescription that I was giving Joey here a second ago is that I would start a land flipping business. You've heard our friend Mark Podolsky come on the show many times, and people that have already gone through his programs who have learned how to buy and sell raw land on terms, creating monthly income streams, being able to sell it wholesale and create cash flows immediately, even being able to not even have to buy it, but just go to someone who has it for sale and then turn around and sell their land to someone else through what's called land arbitrage without having any money. And the reason that I think that that's such a applicable strategy for this scenario is that I think you're going, if I'm thinking of the worst case scenario, you've got to be anonymous, right? And I know I tend to be the critic, and so I'm just going to shoot some holes at your scenarios. Let's just pretend the worst case scenario that whatever happened, you lost your reputation. And if you did, I think it's going to be really hard to go into a real estate group and get people to trust you. I think it's going to be hard to create an online business where I could Google your name and potentially learn whatever the thing that had been done, right? I know none of us would do any of these things, but that's just the worst case scenario. Well, in the buying and selling land space, I get these letters every single week for properties that I own. And I go and try to look up the company, and there is no like about us page. It doesn't show the little owner. It doesn't show me their name. It is as anonymous as it can possibly be. It's 100% online. You're not ever meeting someone face to face. And the skill set, if I possess anything, is in talking and influence. So I feel like I would be able to buy and sell raw land fairly well. I mean, we've obviously watched it done in our partnership. We were over 30-something thousand dollars a month and grows right now. But I feel like I have a good baseline understanding already of what to do. I don't have the skill set or the systems to scale it to what they've done. I don't pretend to do that. But I can start creating some cash flow pretty quickly, I think. That'd be my bounce back plan. And I mean, to the moon and back is kind of what I'm thinking, Stallion, off that strategy. All right. So we talked about step one. In light of our business, our investments crashing, what would we do? I think the first one is think through what would your trampoline plan is that would reduce anxiety. If you could just have that in the back of your mind, you already knew what that was going to be. You could just kind of probably reduce how much anxiousness you have. The second thing, though, we talked about you would do is evaluate your weak links, going up and down your chain and looking for the potential areas that are in your business or in your investment portfolio or whatever your finances are, and looking for the areas where you may have the greatest potential threats and weaknesses. Stallion, what would be one of those that you would identify that people maybe know about, but just need to hear about and be reminded of?
So I'll give you two, if that's okay. And the first one is, man, what we beat the drum about this a lot, but I'm just going to bring it back up in this context, is you have to have a war chest, right? You have to have access to capital in light of a reduction in income, in light of a reduction in the assets that are maybe paying you income, whatever it may be, in recession or worse. You need to have access to capital. And it's a hard thing to do, right? It's a hard discipline because there's so many good deals and you'll want to constantly jump in there, but you can't. you can't always take every deal. You got to keep some in reserve. In fact, 25% of like high net worth, like if you take a portfolio of people that are millionaires, in general, keep about 25% in some form of cash at all times for this very reason. Now, you may have way more than that. I think actually ours would be in above that number, but at the very least, you have to start building that war chest. And of course, we use the infinite banking concept for that because it's a much better place to store that capital. And it's a generational plan on top of that. So just encourage you to, if you haven't already done that, go ahead and set a call with one of our coaches at Strategic IVC. Go to wealthwithoutwallstreet.com/free call and walk through how to get your war chest going under that. Now, the second thing that I think about outside of cash and access to cash is I think about debt. Debt is one of those things that when times are really good, it can kind of creep up because inflation times, cars, houses, these things start to cost more money. And so if you move or if you change cars, likely you may have to take on a little bit more debt than you have in the past. Maybe you've leveraged some things because deals are so good. You've leveraged yourself in places that you may normally not would have done. And I would just say take a kind of an inventory of where those debts are. Are they backed by assets that are actually going to be stable in a recession? And therefore, that becomes not the priority that you need to even consider paying off. And even as we're saying that, there's a course that we have in the community. If you haven't already joined the community, I want to encourage you to do it. It's free. Go to wealthwithoutwallstreet.com/community and join for free and hit me up in the message to say, I want free access to the Paying Down Debt Like a Boss course. And you have to say it like that, paying down debt like a boss, okay? But it will actually walk you through how to look at your debts in terms of a priority. Which ones are the higher risk? Which ones are really low risk that you don't need to focus on? And really get clear on that. Because sometimes if you just have the debt, you may be unnecessarily like worrying about it or anxious about it. When you look at having an objective tool like this, it really helps you to feel more comfortable about it. And the last thing I'll say about debt is, are you in any position to be what we would consider bankable? I'm not saying you need to go out and get bank loans, but as it relates to being bankable, the average, like what they call debt to income ratio, is 36% of your gross income can go towards debt on a traditional mortgage product, okay? Up to 43%. So just for easy math, if you have a $10,000 a month income, you can have up to $4,300 a month on the high end going towards debt. If you take inventory right now and that number is north of that, and we hit a recession and maybe you lose some of your income, all of a sudden you're not bankable, right? You're not in position. If you needed to move or whatever it may be, that's not a good place to be. And so just a something to be thinking about is, how can I then maybe take action on paying down some of those debts and be more proactive about my position as it relates to being a bank?
There was nothing worse than walking into class when you're in school and the teacher saying, pop quiz day. Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
You mentioned the kind of the investment positions that you hold, and you talked about one of them, Joey, which is cash. And yeah, I saw that for people with investable assets over 3 million, you typically see, like you said, 15 to 25% of their holdings sitting in cash. And we've even seen as a country, the cash on deposits at our banks right now are right at $19 trillion. That's up almost $5 trillion over the last 4 to 5 years since we saw the last, recession as we went through COVID. And there's a lot of money just sitting. I don't think people consider that. We're always so focused to get our cash at work, but it is important to have access to that cash. That when things are going poorly, you need to have a reserve, a fallback plan. So how do you balance that? I know when you first get started, you're like, man, I got to get this cash flow going. And you struggle to consider that well. But I think the point is that you have to figure out that balance. And as you do start growing cash flow, it is a wise thing as you watch others with wealth start building up more cash reserves. Another position that I want to caution people on, if your business is a large percentage of your wealth, that to me is a risky area, because most of the business owners out there, I don't think they think their business is going to be their quote unquote retirement plan. But Ernie, I don't know if you know this, but only like 20 to 30% of every business will ever sell. That means 70 to 80% of the business will never sell. So, but you got 100% of the business owners out there believing this is going to be in some shape or form their retirement plan. But yet almost 80% of them will never sell their business. And out of the ones that will sell, only a fraction of them will sell for enough money to actually be quote unquote a retirement plan for them. As much, so I think that's a big area to just focus on, is where are you putting your dollars? How well is it separated? And, I know that there's a 40 or 50% of the population out there that owns a home actually has it either paid off or almost paid off. A large portion of their wealth has been built up in equity. If they don't have the cash flow anymore, the ability to access it, to Joey's point, them not being bankable, because even though they may not have much debt at all, they don't have any income. And so any debt that they tried to get on the home to try to get access to the equity they had in it would put them over that 43% DTI ratio that you were talking about. Ernie, as you assess, what are some of the weak links that you see in the financial chain, if you will? What's one of them that you could identify?
Yeah. I will answer your question, but I have to respond 2 quick thoughts to what was just said. Number one, when is the best time to shore up your debt or to harvest equity out of a property?
When you don't need it.
When you have your income. Yeah.
When you have income and before a recession.
Right.
The not best time to do that is during a recession or during a time of squeeze for you. So talk about being bankable. Now, the best time to get that money is when you don't need it. That'd be the time to do it. Second thought, I know we're talking about preparing for a downturn or a recession, but Russ, you just said something which was a problem. 80% of businesses won't be sold. When I hear that, that's a problem for them, but opportunity for me. And here's what I mean. Why are these businesses not being sold? Is it that the owners don't feel that they can get the amount out of the business that they want? Maybe. Is it that they don't know how to sell their business? Quite likely. Is it that they don't know who they would sell the business to? I think that's highly likely as well. So if you are looking to grow great wealth, that happens by being a business owner. And if you want to start a business, why don't you first look at all these boomers who are retiring, shutting down their businesses, 80% of them, and see if you can help solve those problems for them. Who's going to buy it and how would they sell it, and work that out for them so that you don't have to start a business. You can scale a business that's already been started for you. I think there's a tremendous opportunity for that. By the way, when's the best time to do that? During a recession. when the owners got the biggest pain and they want out, that's the time to do that.
Well, that goes back to the trampoline plan, right? You go identify what are these businesses out there that are being run by older generation people that, to your point, that maybe literally just close the door and walk away from it. And what if you could just walk in and there's an existing customer base? And if you just service the existing customer base, there's most likely there's revenue of some sort, right? That exceeds the expenses of the business, and then you got income. And you might be able to just take it over instead of paying them any money, because they just don't want to see their customers not served anymore. You're like, hey, I tell you what, instead of closing the doors, let me just serve them from this point forward. That's an interesting idea. I like that. All right, so we've talked about the trampoline back plan to start off with, reduce our anxiety by knowing what was that thing, doing an assessment up and down our financial chain, if you will, to try to figure out where are the weak links, doing a SWOT analysis, I think is what you like to talk about, Joey, and seeing the different positions, single points of failure that we have, how much cash do we have on hand. I think there's also leadership that we need to think about in our business. I know, Joey, you and I in 2019, we hired a COO to come in and help us because that was a super weak link that we had, that we were not great at operations, and we identified that. We're now actually making some adjustments to hire even a full-time COO, like a president for one of our companies. I know that we have to grow as a leader. I think I've heard it said that, that an organization grows to the number of employees that the top leader is willing to share power with. And, the way that we start, identifying and handing off these leadership capabilities, because as we move to running a $100 million business, what's got us to here is not going to get us to there. And we have to continue to grow personally. We have to be upping our game to be better, to learn more things that help us find ways to continue to take the business to the next level. If not, then we are going to have to sell it or let it go or whatever, right? Those are the decisions, I think, maybe that goes into why some of those businesses aren't selling, or is that those leaders are not growing. They're not raising up new leaders to take over the business. They're not getting it to a position to be sold. All right, let's move to the third point that we had, and this to me is one that we need to focus on, which is really what are the best practices to go from here. We're at this point. What do we do next, right? So in our group, we cover this. We call it the right next thing. We talk about that there's 5 categories where we can be leveling up on a regular basis to help us get closer to what we want, and maybe further away from the things we don't, right? In that grouping, Stallion, we talk about vision. And I think this is the first one that a lot of people struggle with, is that they don't have any written plans or goals. They got big ideas, right? They're in their own family. They're the idea guy or gal, but they don't have them all written out. And not putting pen to paper is really preventing them from being able to see maybe some of the gaps in their strategy. So they need to sit down and meet with people to do that. Maybe they need to go through some courses. Maybe they need to spend time with their spouse and thinking through what is it that they want as a family. We built a course called the Passport Challenge that is free inside the community. Joey told you to go to wealthwithoutwallstreet.com/community and you can get access to that. I think that's a great start. If you don't have written down goals and plans, that would be a place that I would start. If you do have that, but you are still lacking maybe the plan to achieve it, maybe you don't have an accountability group, maybe you're still making what we call the 3 big mistakes, which is, contributing to retirement accounts, paying off debts instead of building assets, right? Not following the financial freedom formula, using a bad, outdated operating system for your finances. How do you upgrade that, right? We built an ebook called the Passive Income Operating System. To me, is one of the greatest things that we've built because it has so many tools in it. Go to wealthwithoutwallstreet.com/PIOS. wealthwithoutwallstreet.com/PIOS. That tool alone, I think, will help you upgrade and get not only a very clear plan of action, but actually if you will start installing that in your life, it'll help you move the needle. And then the last thing I would say before I hand it over to you, Ern, is just having time with your family to talk through this, right? I think the going from this, needs upgrade to a good position is when you've set like maybe a quarterly family board meeting that you're sharing the plans that you and your spouse have created. And maybe right now, I know for you, Ernie, you have a small child. Jonah's not probably ready for you guys to talk this through. But it is probably good for you and Caroline to talk about this. Think through what that is. I know for Joey and I, it's good to share these ideas and dreams with our kids so they know where the family's going. I think it aligns maybe the decisions that they're making and we're making. They understand why they're connected. And maybe we do that in some sort of retreat fashion, right? I love being able to go skiing or go to the lake or go to a beach or something like that and use part of that time to use that as an upgrade opportunity. If you want one resource that is good to help you do this, it's a book called Entrusted. We've had the author of that book, Andrew Howell, on our podcast in the past. You can search his name on our podcast list and get one of the many times we've interviewed him. But I think that book, Entrusted, would be, if you're kind of at that level, you've done a lot of those early things, which you're thinking through, how do I create core values for my family? How do I start thinking differently with money as I start to build and create wealth? That'd be a resource. How about for you, Ern? What would be maybe a starting point for somebody as they start evaluating what to do with cash and cash flow?
Yeah. Well, I think it comes out of exactly what you're saying, which is getting in alignment with every important party in your family of what you're wanting to accomplish. Is then, well, what do we do with the money that we have? And you gave a clue. You called it the passive income operating system, which is a wonderful thing. I think that everybody listening to this podcast ought to take advantage of, like you said. But that's not necessarily where you start in turning active income into passive income. Where you start is organizing and storing your cash, which is the infinite banking concept. And just to be abundantly clear, the passive income operating system is our application of that concept. And again, how we build the cash reserves that we want, how we store that in dividend paying life insurance policies, and then how we use a regular savings system, how we automate that with our bank accounts to build our cash position. Joey, like you mentioned, those high net worth families doing and having access to lots of cash. We do that in these life insurance policies and grow that position to then how we're able to invest in our business or invest in assets that create an income stream that meet the family's goals and desires of the lifestyle that they want to grow into or maintain or protect. That's how you do that using this infinite banking concept. And one of the benefits of doing that as you begin this, in a recession, one of the biggest risks is loss of income, reduction of revenue, potential increase in expenses due to the inflation that we've been experiencing, just speaking of today, and therefore a squeeze in profit. And what that creates is a loss of income for the family. One of the big outside risks that exists in the family is the loss of life. And if you leave, if you pass into eternity, that will result in a loss of income for the family. And one of the ways that you can protect, one of the side benefits of protecting that loss of income by loss of life, is using life insurance as a replacement to the family of that income. So when you get clear on the family's vision and goals and start organizing your cash into the infinite banking concept, just by doing that, you pick up life insurance death benefit for the family. And we prioritize placing that on the main chief income earner in the family first. And that protects against that risk. Going past that, that creates the opportunity for you to move into insuring next levels, which would be spouses. Let me go with spouse. That's singular. I haven't personally helped anybody insure their spouses. I'm not an advocate of that. So your spouse, and then to your children. And as soon as you do that, you create a life insurance policy on them that, Lord willing, goes for a very long time. And that supports a very long-term vision for the family of what is wanting to be done with money. And so you put together the desire and the goals for that with the mechanism to control the money. And that makes this plan real with money. And that makes it therefore important to the children. That leads to credibility and attention and participation in those family board meetings that you're mentioning, Russ. So the next step is to organize your cash. and implement the infinite banking concept, because it gives you the place to store your reserves, grow your opportunity funds, and then the mechanism to protect against loss of life and implicate the family into the planning.
So good. All right, Stallion. So kind of thinking through best practices in light of preparation for going into a debt, a recession. We talked about a vision for the family. We talked about building out a system that could not only run our cash flow, but be able to store it as well. What would you leave us with?
Well, I mean, you guys already kind of mentioned this, but the why the right next thing is in this order is now that you have access to capital, it just begs the question, what sort of investor am I? Like, what sort of things should I be investing in? I'm now taking control of my finances. It just lends itself to that next step. We got to build some passive income. And we always do when we're walking people through this right next thing grid is if you have no passive income, you don't start with what investments are out there, right? You start with who you are. And we take the assessment, the investor DNA assessment that tells you, man, God's created you in such a way that maybe you ought to consider one of these 15 passive income strategies that align the most with who you are. Like, you have this unique perspective for a reason. Let's use it to your absolute ability. And so I think that's a first step. I think the second thing from there is that you actually write out, what is my investor buy box? If you don't know what that is, we've covered that on the show before. You go and search that, you can probably find more and more information on it. But it really is just defining what are the key aspects of any investment that I would do that one lines up with my DNA, but then also has, let's say it's cash flow within 6 months. Let's say it's appreciation. Let's say there's tax benefits. Like, you start identifying what those things are that are important to where you're going to invest. And now you have really a 1-2 punch to be super, super focused as you go down this path of building passive income. From there, you need to surround yourself with the right people. These are other people on the same path, being investors themselves. Some of them are further along than you. Some of them might be even behind you. But you have now a world of people who are, one, cheering you on and saying, hey, watch out for that I just got hung up on. Because this isn't a perfect process. This is a process of learning. And so you want to take the opportunity to learn from other people. In our book, we call that the support aspect. But in terms of this process of the passive income, it really is about being a part of a mastermind and a community. So once you've done that, you've now got your passive income operating system that we talked about in the last step. And you can now start to really take the chances on the first investment. Once you take that first one, you start to see, man, this is profitable. This is really working for me. Now you can start to just keep stacking on top of that. Reinvest, stack on top of that, reinvest, and allow that to continue to push closer and closer to that 100% of passive income to monthly expenses. If you can do that, you've significantly de-risked the position that you're in terms of heading into a recession or into something worse. So I think there's some more steps around that, but it just in terms of just getting started, I don't want to overwhelm. These are the real keys to getting ahead on your investment portfolio on the passive side.
All right, Tribe. Hopefully this has given you some things to think about, maybe some actions to take as you want to protect your business or your investments in light of a crash or a recession. I've said this on the podcast several times in the past, that there's no such thing as good or bad news. It's just news. It's how we're prepared to receive that news, which makes it either good or bad for us. And hopefully that some of these things are helping you prepare or thinking about preparing. So if news of recession or crash were to happen, it would not be bad news. It could be good news because you're already there, ready to take action, ready to impact new generations as a result of the lessons that you've been putting in your back pocket. Thank you Joey. Thank you, Ernie, for being a part of this. Thank you for listening. Hope you have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.